Amit Kumar Gupta, founder of Fintrekk Capital, joins us this morning for more on what he's really making of the market moods this morning. Good morning, Amit. Pleasure having you back here with us on News 9. No real sentimental movement visible in markets, but the rest of Asia, barring India, is deeply in the red this morning. What is triggering the losses in the larger Asian markets?
Yeah, hi, good morning, Kartik. Thank you for having me. So I think, not much, markets have been already stabilizing after quite a heightened volatility in March. We have a good run since 8th of March when the ceasefire was announced. So it's a little bit of a profit taking ahead of the weekend, I guess. As far as the Indian markets are concerned, the fourth quarter results and the FY27 guidance will decide the market's future direction from here.
Right.
So my sense is that we are already 10% up from the bottom. So markets may pick up volatility from here, sort of stabilize a little bit and be in a range of 23,500 to 24,500. Thereby giving opportunities for both bulls and the bears for buying and selling. But I think till the earnings season is on, there could be some range bound movement on a sort of next 30 to 45 days basis.
All right, so range-bound movement given the earnings season. Let's talk about the earnings seasons and let's look at the Nifty 50 stocks, some of them which are reporting results and some which are due to report. Wipro, of course, has reported almost a 2% decline in net profit year on year, while it has shown a more than 12% rise sequentially over quarter three. That stock is absolutely getting hammered this morning. It's down almost 3% right now as we speak. Amit, overall, the commentary not positive at all, even though Wipro is suggesting that things could change in FY27. But how do you view the stock right now and a price correction on a day like today? Is this an opportunity to invest in the stock or hold off for some time?
It was another weak revenue performance in Q4. Mainly, there was a delayed ramp up in some of the large deals which they cracked. There was a softness in the specific BFSI accounts. So the services revenue only grew by about 0.6% quarter on quarter. So that was below the street expectation. So I'm not surprised it is down about 3-4% this morning. Even the EBITDA margins have declined about 30 basis points. Overall, I think even the management guidance is pointing towards flat to -2% quarter on quarter revenues. So I think it will take a little bit more time for to happen. Remember, even Q1 is likely to face headwinds from the fact that there will be a salary hike rollout given in March. And the large deals which they have bought, those are of sort of low margins. They are making investments in Wipro Intelligence. It will take time to sort of find a bottom into this. The only good thing is that they have announced a buyback of 600 million shares at 250 per share.
Right.
So total of around 150 billion rupees. That's what is there. So what I like is that there was a healthy deal intake, even though it's slow in implementations. What is I don't like is revenue miss and the softness in the BFSI and the healthcare sectors.
All right, so softness in the BFSI and the healthcare sector is a worrying concern. Let's move on now to HDFC Life, which has reported a 4% growth in net profit year on year, announced a dividend of 2 rupees and 10 paisa per share. But again, markets and investors not really liking what they are hearing. That stock is down about 3.5% or so in trade, despite a 4% growth in net profit.
Yeah, overall, I think the numbers were weak. Whether it is the margins or whether it is the premium equivalent, both were down quarter on quarter and below the estimate. Generally, insurance sector is quite heavy on Q4 side because of all the tax saving which happens. So Q4 is generally heavy, but there seems to be a lot of one-offs. Uh, and apart from that, the management commentary which has gone, that does not really give confidence, at least for Q1. The main spoil sport was the lackluster show in the HDFC Bank channel on account of the aggressive offering in the non-par by competitors, which caused the there is a market share loss for HDFC Life.
Right.
That has also led to a slower premium equivalent growth also. And remember, from 1st of July, we are getting the new norms for mis-selling as well. So I think there is a confluence of host of factors which is causing the growth and the margin mix in the FY26.
Right.
So we'll see how FY27 sort of turns up. But as far as the current situation is concerned, I think all the negatives are priced in.
All right, so rates are priced in. Meanwhile, it is going to be a busy weekend ahead because Saturday, that's April 18th, is going to be the announcement of the big ones, HDFC Bank and ICICI Bank. But looking at the charts this morning, investors are pretty much holding on to positions. In fact, a little bit of selling seen in ICICI Bank. What are the expectations from the core banking sector as they announce their results tomorrow?
I think in general, like what we have seen with the certain smaller private banks which have declared the result of Q4 is not so much impacted. So I expect, both ICICI Bank and HDFC Bank to sort of report stable numbers. But we have to see, how going forward the MFI and the unsecured lending book is turning up because of the stress due to the Iran war. That will probably take probably 1 or 2 quarters. So probably by July, August, we'll come to know how much stress is there. But if there is any commentary which sort of front runs this stress, then market can react to that. But as far as Q4 is concerned, I think it's going to be stable. The market will concentrate more on the FY27 guidance, especially in the quarter 1.
All right, so all eyes on FY27 guidance. Meanwhile, some of the stocks which are not exactly in earnings season, in fact, one of them has already announced its results and not bad numbers at that. But other two stocks which are pretty much in the eye of the storm for a very different reason. I want to understand from you, fundamentally, do investors really care about controversies? We've seen TCS, the Nashik employees are now working from home amid the conversion case, which really came, first in social media and then became a main story. And similarly, even Lenskart, the sort of backlash that it is facing right now over grooming guidelines. Overall, do you think investors really care about this sort of controversial news emerging from listed companies? Because this morning, we are seeing Lenskart, in fact, is in the positive territory, albeit just, second decimal points, not really, in fact, now up about 0.2% or so. But overall, do you think investors really care about these controversies, or they are just purely fixated on what the balance sheet and the P&L tells you?
These things can be sentimental. I have to skip the question on Lenskart because I'm not really tracking that company and the news flow. But as far as the TCS is concerned, I think the issue has been dealt with seriously with an SIT investigation going on. But in any ways, it has not impacted the operations of the company. People are still working from home. Work from home is not a big issue now after post-COVID. So I think the operations are not, expected. It's a more of a headline thing and a sentimental driven. It is concerned with a very, few individuals only, 5 to 10 individuals. And the investigation, sort of police investigation was going on for quite some time. So I don't think, investors should be too much bothered about all this. There could be some operational compliance which will come in. But apart from that, I don't think there is too much of an issue with respect to this headline.
All right, Amit Kumar Gupta, thank you so much. As always, pleasure having you here with us on News 9. We will, of course, keep having you back in days to come as well.